Hi friends, Simit here from InformedTrades.com. Today is Wednesday, August 27th, 2014. Time for our daily chart review. In these sessions each day I share the trades I'm placing, adjustments to existing positions that I have on in the markets, as well as just general thoughts on other trades, other currency pairs, commodities that I'm watching that I think have interesting chart patterns. All the trades I'm placing and discussing are real trades placed on a live account, verified by myfxbook.com. You can see my entire trading history over on InformedTrades.com. If any of the information I'm presenting, or jargon I'm using is unfamiliar to you, check out the learning section on Informed Trades. We have a huge archive of learning material covering all markets and methods of trading. Check it out. Share your knowledge. We can all learn together. Let's get started with a look at the charts. First up, I want to switch things up a little bit today and look at a chart of oil, because I think this chart is really interesting from a price action analysis trading perspective. One is, we've had a big gap. Now, this is the start of last week. This is August 18th, a Monday, about 9 days ago. And we see that the market opened, there's a big gap from when the market opened. Big gap down. Now, often at the start of a week, you see a little bit of a gap here. There are gaps, routinely, especially at the start of a week. However, this gap is especially large. I would regard it also as a novice gap, because price is going down and the gap is down. So what that signals is that there's some last-minute novice traders who see the trend and are jumping in, riding in the trend. The move is basically already complete, and the last second novices are jumping in. Now, what that often signals is the end of the opportunity. One final big gap down. That's novices jumping in, being overly persuaded by recent price action, and then it could be ready to reverse. Now, another sign that it could be ready to reverse, in addition to the novice gap, is that price has been in a range since then, basically. If you look here, August 19th all the way through the 26th, we haven't really broken, we've barely dipped past the low of the August 18th candle and barely gotten past the high as well. So we're basically still in that range. This to me suggests a potential accumulation pattern, which is often, when the market makes a big move and then starts being range bound, that range bound move after a sharp decline or rally is indicative of a reversal forming. Accumulation suggests, after a downtrend, price starts forming a range. That's accumulation that suggests buyers are quietly accumulating. The smart money, the money that actually moves the markets, is quietly accumulating. And once they're done, then we'll see price break out and go up. So we have a couple signs there. What looks like an accumulation pattern and a novice gap that suggests oil could rally. On the flip side, and why I personally wouldn't place this trade, is because we are still in a downtrend. We're still below the 50 simple and 200 exponential moving average. Now, some traders, may think that that's not that significant, and there's the counter trend opportunity here is really outstanding. I can see that logic, but I just stick to my method, and I'd prefer much more to see price rally. And for instance, if it rallied back up to 99 or 100, that might be an interesting shorting opportunity. Even if it rallied to 98.57 right here, that seems like a good resistance level to short from. So that's sort of my perspective. It's still in a downtrend, so I'd be more interested in shorting rallies rather than trading against the trend. However, if you are open to trading against the trend, this is a pretty interesting pattern that you might find worth your time. Okay, so that's oil. Just wanted to share thoughts on that. Let's take a look at gold. Okay, and we got a bunch of gaps this weekend. So gold also gapped a bit, but we are still now above 1280, which is a major support level. So price has declined. It's been a down day thus far today after a couple big up days. But again, here, price fell into support at 1270. A couple small days, this could be interpreted as accumulation, then a big rally. Now we're at down day. Support here is at 1280. Resistance is going to be maybe here, 1320, 1330. We're still in this range that we've been in for quite some time. And like I've shown before, if you look at the monthly chart, which is sort of what I'm more focused on from a long-term perspective, we're still in this broader range. And you could actually argue, let me actually draw this here, that we're actually probably clearer to see on a weekly chart. You could probably argue that we have a bit of a uh, symmetrical triangle forming. Um, right there. Okay, so we see these trend lines are converging. Price is in a pretty narrow range here. A breakout of some significance should be coming. Personally, I think it's going to be a breakout up. It could be a breakout down. Um, either way, another way of looking at it is to trade the volatility. If you know a breakout's coming, you can use options to speculate on a breakout in either in one direction or the other, sort of trading the volatility there. But I think that's definitely interesting, and at least in the meantime, 1270 to 1330 is larger range. There are ranges within that. 1320 and 1280 are also significant levels. So it's sort of a range-bound play at this time, but I think the breakout is coming. That's sort of gold. Not much new there, sort of the same story that we've seen. We're definitely in the lower half of the range, so for those range-bound traders, buying now may be an opportunity. And of course, from a long-term perspective, I'd be interested in buy now to accumulate on a multi-year basis. Bitcoin struggling at resistance at 522. This is around the level I entered at. Like I mentioned before, if it gets to 556, I think that could be an interesting level to short from. Could also be an interesting level to short from here, although personally I'd want more of a pullback in light of how volatile this is. And just in general, I really like to see, if we're using this as a swing high and this is a swing low, I like to see at least a 50% pullback before placing an order. And from that perspective, resistance at 556 is looking like a pretty good opportunity. But the only order I have on here is a long-term order I placed where I got long at 530. Basically, a small position that I'm willing to risk entirely, and I'm planning on holding it for some time in the chance that it goes up significantly to 5,300. I make a 10 times return. So my perspective on Bitcoin is very binary. Either I'm holding out for a huge gain, or I'm willing to risk the small amount entirely that I put in. Okay, now on to the Forex trades. This is actually just a second here. Refresh. On to the Forex trades. Euro Kiwi. Okay, nice down day here, and like I mentioned, I short at 58.21. It spent a fair amount of time at my entry level. We had a lot of long wicks though. All these long wicks, 1, 2, 3, 4, 5, 6. You could possibly, depends on how you count a long wick, 6, maybe even 7. But basically, all these long wicks at this level show that bears were defending it. The bulls had difficulty really sustaining a break above 58.21, so that gave me confidence to continue holding on to the pair. I haven't de-risked this trade. I really want to see price close below 56.76, the support level here, and then I will move my stop from this red line down to here, 58.21. So far so good. It was a nice down move in Euro Kiwi today, which is good for my short trade. Not out of the woods yet, though. Still want to see price close at or below 56.76 before I de-risk the trade. So far so good. Just a matter of waiting on this one. Kiwi Yen. So both these, being short Euro Kiwi and long Kiwi Yen, in both trades, I'm basically speculating on appreciation in the New Zealand dollar. This also up day in New Zealand dollar last night, so that's good for both these trades. And also this trade actually has been de-risked because we did have a big rally that closed above resistance here, and then it did come back down. But this trade has been de-risked, so if price falls to 86.30, I will be stopped out. I won't lose any money. Of course, I won't make any money. So not much else to do here, really. Just wait, hold, and wait and see if we go to 89.65, which is my target profit. And that is about it for the trades that I have on at the moment. Well, one other thing I did want to discuss, actually, this pound Australian dollar pair. At the bottom of a range here, it could be an interesting buying opportunity. I'm not going to trade this because I try to stay away from range-bound pairs, and if anything, it's not clear enough. It's too choppy to me. But, one could argue that this is the bottom of a range, and then we've been in a range from April. We're now at that low again, right at here, the low that we saw on April 14th, April 15th. We're back at that level, and we're also forming a doji candlestick. So this could be a support level of sorts. Could be a time to buy, and you could probably set up a really nice reward risk ratio if you're buying here and you're targeting 80 through 50, the top of the range. So that's an interesting opportunity. Like I mentioned, it's not an opportunity I want to pursue because I really want to focus on trends. This is something that's range bound, a little choppy. Also, the moving averages are unclear. Prices below the 50 simple and 200 exponential moving average. So normally I'd like to short this, but because it's range bound, the moving averages aren't that significant anyway. Ultimately, if you're interested in range bound trading range bound instruments, this might be an opportunity in pound Aussie. I'm not, so I'm going to pass on that. And that is about it for the trading that I have on today. Not much new to report. The price action on oil I thought was interesting. You know, even if you traded, that's an opportunity there. But just from a student's perspective, in terms of observing interesting things in the market, interesting dynamics and price action, I thought that was worth highlighting. The only trades I have on are my short Euro Kiwi trade and my long Kiwi Yen trades. Not much new to report there. Waiting for Euro Kiwi to hopefully decline a bit more, and then I can move my stop to break even. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.